Hey guys, Dave Keller here with Market Misbehavior. I love to ask interviewees what their one chart would be. And that is, if you had one chart, just one chart, besides a regular chart of the S&P 500, as a way to understand the broad market environment, what would it be right now and why? So here is my one chart for today.
So today's one chart is tobacco stocks, and we're going to look in particular at Philip Morris, ticker PM. I think this is a really good example to look at. Number one, just because it's actionable. Tobacco stocks have had a nice couple days. They've broken out of previous resistance, which I think is pretty key. So it gives you a good illustration of a rotation from a consolidation phase to an accumulation phase, but also because it's a great way to introduce and discuss the concepts of risk reward and what they mean right about here. So looking at the chart of PM, Philip Morris, a company you're probably familiar with, 131 billion market cap in the consumer staples space. Tobacco stocks and that group is one of the top performing industry groups today. So PM is up 2% when the S&P 500 is actually down 0.4%, accelerating to the downside at the moment. So what do we see from a technical perspective? So this looks a little different than other stocks. You sort of have the financials and others that had a rally into the June peak and then sort of chopped around and are now breaking above those. You had the sort of technology, communication services, consumer discretionary trade, which kind of continued up into September peak and then kind of tripped around. This one's sort of in the middle where it, peaked early in April, then sort of stabilized and underperformed during that May-June period. Then essentially a market performer, kind of improved a little bit going into the September peak, but then once again really underperformed going into September and October. And hit a relative low for the year first week in November. Since then, though, and this is why these stocks have come up on my radars. They've accelerated back to the upside. So from a technical perspective, we're seeing a change in character from lower highs and lower lows here in September, October. Starting in November, you start to see higher lows and now higher highs. So the higher low here in late November that hit the 50-day moving average and held was pretty key. Now that's an important, indication that there's accumulation happening. We've now broken to new swing highs. We broke above a trend line using those previous highs. We broke above the September peak, which is actually pretty important. And all of that is getting above the range that we've been. So we're making a new high for the last, really since the March lows. So overall, that is all very, very impressive. And I think from an overall perspective, as long as we keep making higher highs and higher lows, I think that's pretty key. What else can we see from the chart, though? If you look at the RSI, it's overbought right now. So the RSI is just below 75. Now, I will tell you, overbought is not on its own a negative thing. A lot of people think an overbought stock means that's it. But remember, overbought means up a lot, and that's it. It means that the trend has been positive. So while you would most often see a bit of a pullback, especially when the RSI comes out of that overbought region, extended uptrends will have the stock enter and remain at or near that overbought condition for quite a while, and that's what extended uptrends are made of. So just because it gets overbought is not on its own a negative signal. When it starts coming out of that overbought region, that's when you want to reevaluate where we're at. Finally, the relative strength has really started to improve in the last 5 or 6 weeks, and I think that's an important rotation from an extended period where it's really been underperforming since the March market low, really since the first week in April. If we zoom out to the last 2 years, though, we'll see why I'm a little less optimistic about potential for further upside with some of these tobacco stocks. The problem is, if you look at the last 2 years, Philip Morris really hasn't gone anywhere. On a relative basis, you can see it's been underperforming over the long term, and that's because it's essentially flat at a time when a lot of stocks are making new highs and pushing further to the upside. So overall, this has essentially been range bound, and we're nearing the upper end of that range. When you think about this sort of stock in a risk versus reward perspective, you have a potential reward really to the previous highs. That's really a level at which you'd expect resistance. And we're right in that sweet spot. If you sort of take a look at where we're at right now relative to sort of these levels, and you can see that it actually lines up pretty well with, you can see it actually lines up pretty well with some of the previous highs. Here we go. Shade this out a little bit. You can see how we're lining up to those January and February highs. We're sort of right in that range. So I used to think of support and resistance as specific levels, and you would expect, the price to hit at or near an exact level, and then you'd rotate. But I've learned over time to, with decimalization and everything, I think, over time, it's become more about ranges and less about particular levels. And so I think we're entering into that resistance range at which you'd most likely expect a bit of resistance, a bit of a pullback. So we're overbought as we enter that key resistance range. So I unfortunately see limited upside at this point, just given the fact that we're entering a significant area of supply. In terms of risk, in terms of downside movement, unfortunately, you have a lot of support levels below here. You have a lot of levels at which you could pull back and still be within a pretty good uptrend. You could pull back to the 50-day, which is down, 8 points from where we're at right now, and still argue it's higher highs and higher lows in an uptrend. So at this point, it feels like the risk reward scenario is not super ideal for a chart like this. Compare that to like back here in May, where you had a higher low, you had a lot of room back to the previous highs and limited downside to the previous lows. We're sort of at the opposite of that. So the good news about tobacco stocks is that they've had a nice rally. I think the unfortunate side, or the questionable upside part of it, is the fact that we're right at that significant range. So how do we think of this going forward? Two comments that I would make. Number one, focus on the trend. So as long as the trend remains positive, the stock is in an uptrend. And I think with a lot of stocks right now, the path of least resistance is higher. So one of the tricks you can do is just take a trend line using the lows, draw the trend line from the lows, and just use that. As long as the price remains above that trend line, and again, this is not a super, scientific way of doing it. It's fairly subjective, but it's a great visual cue to just track the fact that the price is moving in a certain trend. And if and when that trend breaks the price breaks that trend line, that would tell you a change of character. It'll tell you something has changed, and you may want to reevaluate that bullish position or bullish call. So overall, the trend has been positive. As long as that remains higher highs and higher lows, that's the path of least resistance. The second thing is, what do we do as we approach those February, March highs? We're sort of right in the range now. Do we pull back from there? And then what, right? Is it opportunistic? Do we remain above the trend line on a pullback, remain above the 50-day? If so, that could mean an opportunity to, buy on the dips or to, look for short-term weakness before there's an opportunity to move higher. But it's all about if we're able to power through those levels. If and when a stock like PM breaks above its January and February highs, just like we saw with plenty of other stocks like semiconductor stocks and others that are well above their previous highs. Once you get through that level, it's sort of blue skies ahead, and there's plenty of potential upside. And even though we're, making new highs, which means from a risk reward perspective, you think we're trading pretty rich relative to where we've been. Overall, the essence of trend following, of momentum investing, is following strong trends. So stocks breaking out of big bases, multi-year bases, like you would see with Philip Morris, could illustrate the opportunity for much further upside. So point number one, impressive run out of the lows and staying above that trend line support is key for the further uptrend potential. Point number two is the fact that we are right around that resistance area from the January, February, March highs on Philip Morris. And I would be concerned about the stock being overbought at that level. It means more often than not, you'd expect a bit of a pullback as it faces that key resistance. Point number three, if and when we break above that resistance level, I'd look for an acceleration to the upside. And it's interesting that is in a fairly defensive, high-yielding part of the market, consumer staples, tobacco stocks that yield over 5% in the form of Philip Morris. That's our one chart for today. Hope this was informative, educational, and inspiring. We'll see you next time. Thanks again for Market Misbehavior.